Hey guys, welcome back to Father and Son Investing. We're going to continue on our journey with AI Artificial Intelligence ETFs. Today we're going to talk about two products from ROBO Global. One goes by the ticker symbol ROBO, that is the Global Robotics and Automation ETF. And we're also going to talk about their relatively new ETF, THNQ. That one is a pure play in AI. Let's get to ROBO. This one really is the granddaddy when it comes to AI ETFs. This one was launched in October of 2013. It has $1.8 billion of assets under management. This fund was really launched before its time. Back in 2013, AI really was in its infancy compared to where it's at today. And we'll see that the performance reflects that. So in 2013, all the way really up till about 2017, we see that the fund didn't do all that much. And then starting in about 2017, it really started to take off. Of note, in 2016 is when BOTZ, B-O-T-Z, launched. So we see that they got in just about the time that the market was starting to take off for AI. If you invested in this fund back in 2013, unfortunately for you, your returns were not that great for a few years. Now, what do I see as attractive for this fund? Well, I like the way that it's broken down large cap, mid cap, small cap wise, with about 45% of the fund being large cap and the rest small cap and mid cap. I also like that about half of it is concentrated within the United States. Outside the United States, about 19% will be from Japan. While this is not a pure AI play, I do like the fact that it is well diversified when it comes to types of industries. Nothing really more than about 16% of any of these, with manufacturing and industrial making up the largest portion, followed by computing and AI. If you're looking for stability, this one is good. Its beta is only 0.76, and the standard deviation is relatively low. These are companies that are well run, well respected, have been around, and sometimes that means that you're not going to get as great return as you might with companies that are a little newer and maybe a little bit more risky. However, that thinking doesn't necessarily hold true. When we look at performance, we'll see that Robo has returned 51% over the last year. And more long-term, we'll see that it's about 22% per year. Now, what is a negative about this fund? Let's just jump right to it. The expense ratio, it's almost 1%. That is a lot for a passively managed fund. Let's jump over and start talking about THNQ. That's the Robo Global Artificial Intelligence ETF. And we'll quickly just talk about expense ratios while we're on that subject. So it has been 0.68%. That's significantly better than Robo. That will be moving to 0.75%, it looks like. It says here the advisor has agreed to waive fees through August 31, 2021. Obviously, that deadline has passed. Now, I really like the way that this ETF concentrates on AI. In fact, let's just look at what it says here. Specializing in robotics, artificial intelligence, and healthcare technologies, whose mission is to define and identify the universe of artificial intelligence for investors. Let's just go ahead and continue to compare Think versus Robo. When we get to the capitalization breakdown, you're going to be getting a lot more large cap with just a smidgen of small cap. And when we get to geographic breakdown, you're going to be getting a lot more U.S. Of the holdings outside the U.S., it's going to be China that makes up the largest portion. Now, because this is such a pure AI play, THNQ is going to break this down into companies that do applications and services and companies that provide infrastructure for AI. And we'll see that this is broken down about half and half. In an article published in Kiplinger, a representative from the company had this to say: every company goes through scrubbing, then we score them. Tech leadership, revenue purity, AI investment. They go on to say if you score really well in revenue purity but not really well in AI investment, we don't think you're really serious. Having AI in your business is not just about hiring some data scientists to run tools and apps. You need to build an infrastructure. They point out that the infrastructure software holdings such as Twilio and Atlassian are enabling software developers and businesses to build a new generation of intelligent applications. And then hardware companies such as ASML Holding and Lam Research are building a new generation of microprocessors designed to process AI. Additionally, you're going to get some e-commerce in there. Companies such as Shopify and Wix that use artificial intelligence to personalize website experiences. Now, this one really is a baby compared to ROBO. They were launched in May of 2020. They only have 38 million and some change in assets under management. We're going to wrap this up just by comparing them side to side. So expense ratio, we talked about this 0.68% should be going to 0.75%, but still significantly better than ROBO. If we compare their performance side by side, we're going to see that they track each other pretty closely. 1 month return, pretty similar. 3-month returns, also similar. They start to spread out a little bit when it comes to year-to-date and 1-year returns. If we compare some of the attributes of their holdings, we'll see that when it comes to value, THNQ is pretty underweight on value stocks. When it comes to company size, again, we see that Robo has the larger company size. They also have the better balance sheets. So THNQ definitely is a little bit more of a risky investment, and they have stocks that are a little more volatile than ROBO. After all of that, which one do I prefer? I'm going to choose THNQ, THNQ. Why? Well, number one has to do with the expense ratio. For passively managed funds, 0.95% seems a bit outrageous to me. Certainly 0.75% is still a lot as well. That is essentially what Cathie Wood's ARKQ is charging, but remember that hers is an actively managed fund. Nevertheless, I like THNQ because of its pure play in AI. I am very interested in AI investing, and I like the fact that this is very, very concentrated in AI, and they are scrubbing companies in here to really make sure that they are using AI not just for a little bit of data science. That's going to do it for today. I hope this was informative for you. I hope this series has been informative as well. We're going to do one more tomorrow. That will be VGT. That is the Vanguard ETF that has a lot of AI companies in it. Certainly it is not a pure play, but its expense ratio is fantastic, and I do actually own some of it. So we'll talk about that tomorrow. If you enjoyed this video, please give us a thumbs up. If you didn't enjoy it, go ahead and give us a thumbs up anyway. That really helps with the YouTube algorithm. And until next time, enjoy your investing.